Hi everyone, Adrian Player here, mortgage broker based up in Brisbane. This will be a quick video and breakdown of a deal one of our clients has just bought through our strategic partner, our buyer's agency. So let's go through the deal. I'll give you the breakdown and it'll be a nice and quick video. So let's go through the stats from the top. 459k house on a large block of land. No renovation was needed in the main house. Double granny flat site. So a lot of the people that are looking at these sites are thinking that they can only do one granny flat. We've found ways to get two granny flats on these sites. So they're looking at it from one value standpoint, we're looking at it from another. Not many people know the areas that we're buying in and that this is even possible. Okay, so that's where the value is, that's where the play is, that's how we're making money for our clients. This is one of the deals. So you will need to find a granny flat builder that knows these sites and has built a lot on these sites before, and there's not many in this area. Client did a 20% deposit. We used the standard clauses of 21 days finance clause, 21 days building and pest clause, standard 6-week settlement, which we bumped back to 8 weeks due to Christmas. Okay, the end debt on the main house, 367 grand, something around that. And then rent on the main house was low and the lease was coming up, so it was at 430. It will uptick to about 540 in this market on the next lease. Okay, granny flat builds, 2 bed, 1 bath, 1 car, 70 square meters each. The contract prices for the granny flat builds are somewhere around the 210 grand mark. As we said, we can fit on 2 granny flats when the majority of the other buyers are looking at this and thinking they can only do 1. Okay, so you're getting 210 grand times 2, that's 2 granny flats being built, plus the 459 grand, which is the contract prices of everything, which equals 879 grand contract price once the builds are done. Okay, so let's go a little bit further up on this. I'm just adjusting it now. Okay, good. So we're going to be going through the last bits. So the rents will be 540 plus 440 plus 440. Yes, 2 bed, 1 bath, 1 car. If it's brand new, is getting between 420, 440 every day of the week in those markets, and the vacancy rates are super low. Right now they need so much extra stock, so you're going to find plenty of tenants that want this. Alright, so the total of the rents is $1,420 per week times 52 weeks in a year. You're looking at just under 74 grand total in rent on a per year basis. Alright, this is not a strata property. You know, you're not having to pay anything like that. You're just having separate leases on everything with a fence that divides the properties. Okay, so what else have we got? So 20% deposits times 879, which is the total of the contract prices, equals a loan size of about 703 grand total. If you work out the total of the rent and versus the actual debt that you've got to take out to get this, you're sitting on a yield on debt of 9.52%. You can't really get that anywhere else, can you? We're talking about yields on debt that you're really going to be getting in mining towns. Okay, this is not a mining town, so you're able to generate this kind of return. All right, so you're under market price. We think it's somewhere between 80 to 120 grand because we're able to get the double granny flat on the site when others aren't. Okay, and then we're going to go down to the last bit. Okay, so I'm just making sure it's all showing. Yes, it is. Okay, so yes. So the last bit. After the builds total should sell if clients want to for circa 200 to 300 grand uplift. That's not assuming any kind of material uplift in the area. We're just focusing on once the builds are completed, and normally you get a shortfall with the valuation as soon as the contract price gets done. and normally 3 to 6 months later you get quite a big value uplift, right? And if investors want to buy these kind of ones and they're complete, normally they're going for somewhere in these markets, like, and there's very few examples, somewhere around, you know, the 7% mark. All right, and obviously we're sitting at 9.52% yield on debt, which is why we think that the total uplift will be somewhere around 200 to 300 grand that this client is making, not including any economic growth or uplift in the area. So we're being conservative on that. But clients don't do that. A lot of the time they don't sell it. They buy this inside of a trust. Okay, then they get a letter to say that this trust is profitable from their accountant, or we can refer you to the best investment property accountant in the country that we found, and a lot of our clients are over there, because a lot of these accountants are not wanting to sign these letters or don't understand these kind of structuring that we do to buy a lot more property, and then they isolate it inside of this trust and then buy their next property in another trust, and we can show you how to structure that and how to do that the right way, where you are recycling your borrowing power so you can just keep on going. So imagine having this kind of property in your portfolio, ready to go, paying for itself, multiple leases, low risk, because if one of the properties isn't rented out, the other two are paying off everything, and the amount of uplift that you can get with paying off the property quickly, or you could use that cash flow to fund future purchases inside of other trusts. You could pull that cash flow out and roll it into another deposit, or just use that for equity pay down on the loans, and there's a couple of different ways that you can do it. But either way, this is a deal that's active. It's just about to settle. Client's extremely happy. And we have one other site that we've done this as well, where the numbers are very similar. So we are very picky on the sites that we're buying. We know exactly what we can do with them, and other people don't know the value that they can get out of those blocks, which is why we're happy to pay some of the stupid prices that we're seeing, because we can do stuff with these blocks that others can't. All right, that's why people use our services, because we are making money for our clients. This is an active deal, pretty conservative on the numbers here, and we're not even adding any economic growth if the builds take, 4 to 6 months. A lot of the time in these areas, we're in a position where we're doing CDC, and we could be starting a granny flat build inside of 4 to 5 weeks, when a lot of the slower builders in the area are overloaded and taking 12, 14 months, for the total. We've got a granny flat builder that's in that area, and I think the quickest we've seen one granny flat build is 4 months, and the doubles are normally taking about 5 to 6 months to be fully built on site, with everything done in a turnkey package. Alright, so hope that you've liked this video, hope it's given you a lot of value, and this is just one of the deals that we've done. We are actively got a strategic partnership in the buyer's agent space, and this is an active deal where a client's paying a 15 grand fee, but getting these kind of yields, not being able to find these sites, not knowing what to do with these sites, and not having everything set up for them. So this is just one of the deals that we've done where a client's made a lot of money and they're very happy. Alright, so we'll speak with you soon. Have a great day. If you want to book an appointment, you can in my calendar below, and we will sit down with you and we can roll out this strategy or some other ones and exciting ones that we're doing. We've got some clients that are buying townhouses, villas, and units. We've got other clients that are doing micro apartments right now through the strategic partnership, the buyer's agent, or we've got clients that are doing houses and grannies. Okay, and there are some areas that we are able to strata title, which means that we pay a very small fee and get a very large uplift in strata titling the two lots, and not many people are doing that as well. Alright, so if you want to speak to us about us rolling out these kind of strategies, a buyer's agent fee is a fee up front, but it does add to the cost base on your properties. and you can go ahead, and when you sell these properties, you get a discount on your capital gains, you know, if you pay a buyer's agent fee. So yes, it comes out of your pocket now. You do get a tax benefit later, but always speak to your accountant on those items, all right? And we have a very good accountant in the investment property space if you need one. So trust what they say every time. This is just an example. All right, you have a great day. Bye.